Hi guys, welcome to our channel, The Mechanics of Making Money. Today, we're taking a deep dive into the waters of global finance, specifically focusing on the World Bank and the International Monetary Fund, or as we know it, the IMF. Are these institutions truly evil empires, as some might suggest? And where does their income originate from? We'll be peeling back the layers to see what's really going on. In today's video, we will delve into the roles, functions, and sources of income for these financial giants. The World Bank, despite its name, is not actually a bank in the traditional sense. It's more accurate to think of it as an international organization with a mission to end extreme poverty and promote shared prosperity. Now you might be wondering how the World Bank goes about achieving these lofty goals. Well, it does so by providing loans and grants to both governments and private enterprises. But these aren't just any loans or grants, they're specifically earmarked for development projects. These projects are carefully selected because they are expected to improve the economic prospects and quality of life for people in the recipient countries. Imagine a country that desperately needs a new infrastructure project, like a hydroelectric dam, to provide affordable and sustainable energy for its people. But the country doesn't have the necessary funds to undertake such a hefty project. That's where the World Bank comes in. It provides the financial assistance that enables the country to construct the dam, thereby enhancing the nation's energy capacity and potentially lifting thousands of people out of poverty. It's also worth noting that the World Bank doesn't just hand over the money and walk away. It stays involved throughout the life cycle of the project, offering technical expertise and advice to ensure the project's success. And this is crucial because it helps to ensure that the funds are used effectively and that the project delivers the anticipated benefits to the people. The World Bank's work extends beyond infrastructure projects, though. It's also involved in areas like education, healthcare, and environmental protection, all of which are fundamental to enhancing living standards and promoting sustainable development. So, in a nutshell, the World Bank is more than just a bank. It's a global development cooperative that uses its financial resources and expertise to help countries improve their economic prospects and quality of life for their people. Its ultimate aim is to create a world where everyone has the opportunity to live a prosperous and fulfilling life. So, the World Bank is essentially a global development cooperative that aims to improve living standards worldwide. Moving on to the International Monetary Fund, or IMF. This is a global organization that comprises a staggering 189 countries. The primary objective of the IMF is to foster international monetary cooperation. Now, you might wonder, what does that mean? Well, it's all about ensuring we have a stable and secure global financial system, one where countries can trade with each other without the fear of sudden monetary crises or currency crashes. But the IMF's role doesn't stop there. It also plays a significant part in promoting high employment and sustainable economic growth. And how does it achieve this? The IMF provides guidance and assistance to countries in developing sound economic policies. We're talking about policies that encourage job creation, economic stability, and a healthy rate of growth. This is a crucial function of the IMF, as good economic policy is the backbone of a strong, prosperous nation. Now let's talk about poverty. The IMF is committed to reducing poverty around the world. It does this in a number of ways, but one of the most significant is by providing loans to countries in need. These loans come with conditions aimed at addressing economic vulnerabilities and fostering sustainable growth, which in the long run helps to alleviate poverty. The IMF also serves as a forum for advice, negotiation, and assistance on financial issues. It's a platform where countries can come together to discuss their financial concerns, share ideas, and negotiate solutions. The IMF provides technical assistance and training to help countries build better economic institutions and strengthen their capacity to formulate sound policies. In short, the IMF promotes international financial stability and provides a forum for advice, negotiation, and assistance on financial issues. It's a vital global institution that plays a key role in ensuring the world's economies run smoothly and efficiently, thereby contributing to global prosperity. Now that we understand their roles, let's dive into how the World Bank and the International Monetary Fund get their income. To kick things off, let's look at the World Bank. The World Bank is primarily funded through three main sources. First, there are the contributions from member countries. These nations, 189 in total, make regular payments, forming a significant chunk of the World Bank's income. Next up, we have retained earnings from the bank's lending operations. The World Bank lends money to developing countries for various projects aimed at reducing poverty and supporting development. The interest and repayments from these loans accumulate over time, making up a considerable part of the bank's revenue. Last but not least, the World Bank also raises funds through the international capital markets. It issues bonds that investors, both individuals and institutions, can buy. These bonds are attractive to investors because they're backed by the World Bank's member countries, which gives them a very low risk. The money raised from selling these bonds is then used to finance the bank's operations and projects. Now let's shift gears and talk about the International Monetary Fund, or the IMF. The IMF's primary source of funding is what's called quota subscriptions. Each of the IMF's member countries is assigned a quota, essentially a contribution that reflects the country's relative size in the global economy. This quota subscription forms the IMF's financial resources and determines the voting power of each member. In essence, the IMF's income is like a pool of resources, with each member country pouring in their share based on their quota. This pooled resource is then available to any member country that needs financial assistance. So, while these organizations wield significant financial power, their income is derived from the contributions and participation of member countries. The World Bank and the IMF, therefore, are not self-sustaining entities, but rather, they rely on the collective financial commitment of their member nations to fulfill their mission. So, are the World Bank and the IMF evil empires? It's a loaded question. We've explored their roles, functions, and income sources. Both institutions aim to foster global economic stability and development. The World Bank focuses on poverty reduction and long-term development, while the IMF acts as a sort of global economic watchdog. Yet they're not without controversy and criticism. Their impact can be a double-edged sword. Thank you for watching. Please remember to like, share, and subscribe. Stay safe out there.